check 1 2. Mic check 1 2. The FrostFam 21 here. SheldronFrost reporting.
Your newest session.
Yeah.
Seaweed, light, crispy, and bursting with flavor. This new food-packed snack is a full-on taste adventure.
Shit, it's cold as heck.
Roasted into light, crispy sheets with bold flavors like chili lime and cream barbecue. Give me a
Thank you.
organic,
Thank you, Admiral
calories
Dave.
per pack of crave-worthy crunch.
I ain't gonna lie, bro, I'm tired as heck.
Give me this sneak snack at your
Doing
local
these
store today.
24-hour streams and whew, I got off last night, boy, and I feel like I got a little bit less than 6 hours of sleep. But I'm gonna have a lot of energy anyway. I'm gonna stand up, walk around, run, all that. I'll let y'all know if I go to sleep. Let's play it. No, I should be up. Pretty much all day. Except a little bit. Oh. Try to see if I'm gonna hold Apple or end up taking profits on Apple. Let's see, I got PLL on my watch list too. I'm gonna see what the SPY does. SPY broke all-time high. Trying to pull it back right now. And we're gonna see if they're gonna make a new all-time high, or they're just gonna pull back and have a little bit of more. Pope is up 26% in pre-market. They did a deal with somebody. Somebody tell me what Pope did. What Pope doing? Yeah, but get in her. Shit out of that dude. Blowing me up all morning, and then I get in here. He ain't even in here. You know what I'm saying? Like, blowing me up and he ain't even in here. I cracked my phone yesterday. I was trying to send a text and set my phone down on the deep freezer, and that thing fell off the deep freezer. It fell right on his face and cracked. I'm tired about that. Looking at my phone, it's all cracked and junk. Market open.
As far as the Dow Jones Industrial Average, hello, 50,000. I could wear my cap again. Up 390 points. That is gaining 0.75%. Best performers include Cisco Systems. Right, we talked about the gain that we saw after earnings of 13%. Takes two, Norwegian Cruise, Hewlett Packard, Carnival, Zebra, Accenture, so the cruise lines and a few others in tech, really helping to lead the way here on Wall Street. As far as the NASDAQ, let me just take a quick peek at that to see whether or not we managed to crack that soon. Nope. Close, but not right there, okay? So longer records on the NASDAQ, but not at this moment. The high is 29,452. We're at 29,362, all right? You're about 90 points away. That being said, let's talk about the movers, okay? Let's get the corner.
Apple like it was trying to be bullish. It's getting rejection. Where's this from the top? projection. Alright, give me 1 second.
17% at the moment, off to the races. The win Klarna needed off the back of its latest quarterly results.
Slow this
Better
down.
than expected on both the top and bottom line. On an adjusted basis, it did lose a penny a share, but that was much better than expected. And if you strip it out, it actually swung into the black for this most recent quarter. Revenues jumping 44% to over $1 billion, so that was better than expected. Gross merchandise volume also topped estimates that rose 33%. Klarna is expanding its user base, its merchant network. This quarter shows there's some momentum here. Their growth engine is their active users. That rose 20% year over year at 119 million. Their merchant network, that grew 49% year over year at more than 1 million there. There is some market share gains you're seeing here in Klarna, especially when you look at it compared to peers. The CEO highlighting the network effect. He's saying that more users attracted more merchants here. The merchants are becoming more interested because of the user stories there. Again, they had some strong top-line growth here. In terms of their guidance, they're guiding for Q2 revenue coming in between 960 million to $1 billion. That's actually a little lighter than what Wall Street was looking for, but they are willing to forgive it given the strength, the growth engine that we're seeing for both users and merchant network. So they're showing real momentum here, Nicole. Understood. All right, there it is, up 17%. What a move. Let's talk about the UBS note on Intel. You know, you thought Intel was doing so great. There's one metric, not so great. Yeah, so Intel pulling back for the third session in a row today. That stock is down about 5% right now, more than 5% at the moment. So it's giving up some more ground this week after a massive rally that's seen this stock, what is it, more than triple this year. So that momentum pulling back. The issue is competition that UBS has. They're showing that Intel is losing some shares in its server CPU market. They believe they're losing shares to AMD and ARM holdings. They see data that's showing that those who are gaining ground, ARM in particular, benefiting from more power-efficient chips that are favored by the hyperscalers. That's what UBS's channel checks here. Now, the big picture here, UBS says the market is still booming. They see the server CPU opportunity growing nearly six-fold by the end of this decade, and that's driven by the AI workloads here. So Intel is still growing, but in this AI arms race, it's essentially saying you're not alone here. You're losing some market share to AMD, to ARM. They're winning, ARM gaining traction again because of the power efficiency. AMD's been benefiting from just the multi-layers there, which are ideal for AI workloads. That's the view from UBS. They believe, though, that ARM in particular could reach 40 to 45% market share by 2030. Wall Street clearly sees this as a headwind for Intel today. So that big winner of this year is taking a step back this week.
We're above 41 right
and
now.
last but not least, and you know they were trying to battle for market share forever. Yeah. And a day. We've been on Wall Street. Let's talk about Apple because that kind of price target high. It did. Another vote of confidence for Apple. The street has been really loving Apple again recently, and you've got Tim Cook over in China along with that delegation with President Trump. Evercore ISI this time is raising its price target. It's raising it to 365, so it obviously sees some momentum from here.
Who said that?
Strong performance for Apple. The stock is little changed in response
On my stick.
right now to that note from Evercore ISI. But again, this is a stock that has been gaining some ground recently and increasing views here, expecting it to rally more than double digits this year for Apple. Again, the share is little change right now, but Evercore ISI says investors have been too focused on Apple's AI rollout. They think the bigger story is this ecosystem. Once you're in the ecosystem, it's hard to get out of it. The phone, the Mac,
appreciate the following, man.
Where there may be some
Trying
sectors
to
to
build
make
up
some
this
money.
YouTube
Maybe you don't jump in
industry.
today. Opening bell. We'll be right back.
I hope everybody is following, actually, giving this up on YouTube, because I'm trying to build that up.
600 likes to give away 10 more SFM 50Ks. You have time to switch to Premier Points, which here's what Gene got paid out.
Shut up. Starting above 60. Are we gonna make an all-time high today, bro? Oh, I gotta turn this down. Oh, I'm freezing, man.
While others recap the news, I hope you read between the lines from what's moving markets to what's next. With sharp takes and market know-how, follow me on all social media platforms at Diane King Hall and connect with me on
Spot. I
LinkedIn.
mean, not spot. I'm going down.
A 15-minute move to do that.
Kick off the morning with the data and decisions for moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation risks and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com. Welcome back to Opening Bell. We're seeing most of the sectors higher, some like tech, financials, and industrials. Some pressure, though, on healthcare and materials. Patrick Kennedy, founding partner, Allsource Investment Management, is with me on this record-setting day. The S&P 500 is now at a new record again. And you say, well, you better eye what you want, but maybe today is not a good entry point. Why not?
The market's a long way off the bottom, right? So the RSI right now is through the roof. Many sectors are hitting all-time highs, and usually when we have a big thrust like this going forward, we get bullish. But the fact that 10 stocks are making up 40% of the market right now and are driving most of that momentum, that gives us a bit of caution. So right now, we just want to see some consolidation before we move forward.
So consolidation before we move forward, because I know you have different sectors that you want to get to, but could you tell me more about when would be the right time? So the S&P right now is at 74.77. When would you say is a good time to get in?
We want the RSI back around 50, right? And then we'd also want to see some of the other sectors perform outside of the Mag 7. So the Mag 7's done phenomenal. We're not saying to sell that by any means. And we have seen some breadth within the market from the beginning of the year. We have seen the equal weight keep up, but we'd like to see some consolidation amongst other sectors, participation amongst other sectors outside of the Mag 7 going forward. So that's what we're looking for to jump in.
Let's go looky.
And sometimes we have market breadth that is broad-based, not always. Sometimes it really led by tech. Let's talk about where you are bullish. Cybersecurity is one area that you like and continues to like. I mean, arguably, people will say it's even more important now with AI.
450.
I couldn't agree more. We were actually at a conference a couple weeks ago, and we had our security team who does our tech security give a presentation. And we thought, okay, here's another snooze fest, right? But there was a lot of great stats in there and things that they're doing right now to stay up to date. And one of the things they talked about was this release of Mythos from Anthropic. So it's a new agent that Anthropic came out with, and they immediately pulled it back after
Did you go to work today?
And the reason why was Mythos was able to find, I think it was 271 vulnerabilities within Firefox. So what that
Well, be extra $4 for that.
265. So it's a 225 here. So that's a nice call. Jeffries has a 265 target up from 215 with a buy rating. So they're both at 265.
These
And
setups
hitting
will be
some
looking
records.
bullish.
Actually, the records were yesterday at 220.
I'm gonna see the 15
And we're
one
close
to
to
my
that here at 225. So you have at least, according to these two companies, you have a 40
down, bro.
move to the
Stress
upside.
down.
Talk about healthcare, biotech. That's another area that you like, as well as gold. But let's talk about healthcare and biotech.
So healthcare, we were long last year.
All
We
right,
stayed
moving around
long
this
coming
shit.
into the year.
Stress down in there.
Last year, the XBI was up over 30%. This year, I think it's up over 11. That's solid
Oh,
momentum. We don't see that
shit.
momentum breaking anytime soon. It's breaking out of a 10-year range, right? So you've had this
Look at that noise
range-bound
go.
market within biotech for a decade now, and it's finally breaking out. And for all the same reasons that cybersecurity will do well because of AI, we think biotech will also do well because of AI. I actually heard a story where there was a tech entrepreneur in Australia that used AI to come up with a cancer vaccine for his dog. Now, I thought at first, okay, this is just clickbait. Sure enough, that's a true story. So it shows that using AI, you can advance a lot of these drugs pretty quickly, and we expect a lot of those breakthroughs to come out within the next 12 months. We also expect M&A to pick up in a big way within the biotech sector. Some of the bigger names have a lot of dry powder. They're just waiting to buy some of these proven drugs, and we think AI gets those drugs to that proven state pretty quickly.
All right, and then what about gold? Because people love to invest in gold. The 46 to 80, you know, the 5600 is probably the high that I had seen. But I've had guests who said it's heading to 10,000.
We think it goes to 6,000, right? We've been bullish on it since we've been talking the past 12 months, right? I think that gold has all the right bullish factors in place. You have geopolitical risk. You have, folks overseas buying it. You have central banks that are picking it up. So now there's an institutional floor because of those central banks basically ditching dollars and treasuries and buying gold. We think it's a buy and hold asset going forward rather than a tradable asset. If you had asked me 5 years ago, that was more.
Hey, I heard a chicken over there. Hey.
Portfolio. Now with all of this institutional buying and inflation,
I heard a chicken over here.
we think this is a buy and hold asset and a stable.
Tell that chicken to sit down somewhere and shit.
And also, I wanted to ask you more about the infrastructure plays that you were discussing, Patrick. What did you mean by the infrastructure plays?
We have a lot of exposure to private infrastructure. So data center, obviously, but then some boring themes as well, right? So we like, leased airports, private toll roads, battery storage, things of that nature. These are real nice.
PO's looking good, but I don't know who was talking about PO. They need to be slapped.
Nice hedge within the portfolio. Even during COVID, when you would think that infrastructure.
There's a target right here on 42 on PO.
Most of the strategies we use still produce positive returns. So that's exactly the sort of thing.
How do people get access to these?
You have to be an accredited investor, and you have to go through a financial advisor, right? So that's the best way to do it. Work with an advisor that uses these tools and knows how to incorporate them within a portfolio.
All right. Well, thank you, Patrick Kennedy. How do you feel about Dow 50,000 today?
I guess it's a good sign when the market's going higher, right? So.
Thank you, Patrick Kennedy, All Source Investment Management. Good to see you. Coming up, key levels to watch on the charts. We've already pulled back, right? I had to ask him. It seemed exciting, but it's gone. All right, stay with us. We'll be right back.
Change the way you record podcast voiceovers and branded content with the #1 AI-powered voice generating technology. Stop searching for the perfect voice and stop wasting time recording.
Oh, for real?
You could have done that. Same goes for where you invest.
They don't be getting enough.
Level up and invest smarter with Schwab.
I'm Jenny Horn. We go
They don't get
beyond
enough.
the headlines, tracking the trends, sector moves, and fundamentals shaping the market.
You messing with a bunch of little dudes.
This is Schwab Network. Subscribe at schwabnetwork.com.
Spy don't make a new high, bro.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that
Spy's trying to go to
investor
800.
decisions, all with expert analysis and actionable context.
Yeah, you
From
can understand
inflation
like
data to
policy.
sector rotations, earnings to policy. It's a comprehensive In-depth market coverage
At
straight
750?
from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
They like whole numbers. You doing something?
Welcome back to the opening bell. Key levels to watch here. We
What's up
did
right
have a
now?
record for the S&P. We did see down 50,000. And not for the NASDAQ. Senior markets correspondent Kevin Green is watching every check, every number, every sector. What levels are you watching right now, Kevin? I know you're keeping always a close eye on the S&P.
Definitely, Nicole. Good morning. We are actually seeing a very interesting market, at least to start off today's session. We have about 56% of the stocks in the S&P 500 in the green so far, and we may have some news headlines hitting the wire. You are seeing the dollar actually moving a little bit lower here. It was moving relatively strong, and then right at the open, about 5 minutes
It is
after
having
that,
a pull
we
back
started seeing the dollar move down about
slightly,
20
kind of,
pips.
sort of.
So that's actually an interesting dynamic to start off today's session, but we continue to make higher highs, higher lows. 7,500 to the upside is really going to be the focus for today. We continue to see this rolling up of activity when it comes to the, not only call buying, but also premium selling to the upside, which is also a bullish factor for this market. Now, if we see any type of pullback, 74.40 is going to be our first major area of support. We would like to be able to hold and bounce higher, but not 74.20. You are starting to see that those puts are starting to get a little bit more narrower when it comes to the amount of flows here. And that's also being reflected in the cheap or relatively cheap premiums that you're seeing in the SPX options over the last couple of trading sessions. So overall, you're actually seeing some pretty decent market breadth. Financials also kind of catching a little bit of a bid, at least for today. But once again, you are seeing a lot in the commodity space, a lot in the foreign exchange markets, currency markets, a lot of gyration actually over the last 5 minutes or so. So maybe we will see some headlines hit the tape over the next couple of minutes.
All right, well, just after 9:45, I was checking the first 15 minutes on the NASDAQ, but it hadn't hit the high yet. But just in the last few minutes, we did hit a record on the NASDAQ 100 as well, folks. What about the financials, Kevin?
Yeah, so, I mean, obviously we're making new all-time highs. I don't want to dampen anybody's enthusiasm, but if you look at the financials, it has been lagging. It's been trading below the 20 or 200-day moving average. And I'm actually taking a look back at the Excel left, going back to 1998 to the present, though. This is a monthly chart. The reason why I kind of bring this up here, Nicole, what I found very interesting over the last couple of trading sessions, the relative weakness that we are seeing. And if you go to the monthly, you are starting to see a bearish divergence taking place, as well as that MACD cross. And unfortunately, if you go back over the last almost 30 years or so, you can see that bearish MACD cross also coincides with around a 15 to 17% drawdown in the financial sector alone here. That would take you down to around that $42.50, $43-ish area. I'm not saying that that's going to happen overnight, but it also is very interesting to see this type of technical setup given the interest rate dynamics that we are in right now, as well as the inflationary dynamic. Now, could that derail this market? It doesn't seem like it's going to do. It's going to do that, at least for now. If that tech trade and communication services trade does pull up, but watch out for financials over the next couple of months. This technical setup doesn't look that great.
Weakness in the financials. And, I appreciate the date you picked, the 1998. You said around 30 years. It's exactly 28 years because it was my anniversary this week, and I was married in 1998. So I can tell you it's 28 years. May 9th was our anniversary. So thank you for that. Let's hope for more for those financials for the folks who own them. Thank you, Kevin Green. So let's continue our market chat here on the record-setting day on Wall Street. Both Alex Coffey and Ben Watson are with me, Senior Manager, Trading Services at Charles Schwab. Ben, look, what are your thoughts? Not only are we seeing records for the averages, but also names like NVIDIA, for example, as we have the Trump-Xi meeting, too.
Yeah, and Nicole, this is really kind of one of those interesting names. Obviously, it is at the core of what's been going on and perhaps the negotiations that are going on in China. You have the news that's coming out about the H200 chip, and that is what's driving this enthusiasm, I think, to a certain extent for NVIDIA this morning. But nevertheless, they've been lagging somewhat behind the larger SOC, semiconductor complex. Now starting to see a little bit more enthusiasm this morning. Gap up rally now within the last maybe 10 minutes or so. Started to see that back off just a little bit from that early high. But trend strength. You've got the 50 period turning up. You've got this well above the 200 period moving average. Broken above this 220 resistance area. It's kind of in this upper channel that I've drawn in here, which is just simply an extension of these symmetrical moves that NVIDIA has been making. Once it's broken out of that sideways
Apple.
And I think the lesson through all of that is every market is different. History does rhyme, though, and what we're seeing right now, what stands out to me, is that dispersion is really picking up, Nicole. What I mean by that is that the volatility in the actual individual components of the S&P 500 is remaining relatively big and relatively high, and you're seeing quite a bit of swinging back and forth in several of these names, particularly hardware and semiconductor stocks and software stocks. But the direction that these moves are happening in isn't necessarily the same, and so you're not seeing a ton of volatility at the index level. That's why we've seen VIX come down a lot. But that doesn't mean if you're not invested in these individual stocks that the risk has come down. If anything, what we're seeing is that the day-to-day volatility for these memory stocks and these AI-driven names is as high as ever.
Yeah, and and thank you for your good wishes. I've been here since actually 1995 when I started with Dow Jones. So I really had the privilege to witness the most incredible, obviously, moves in the market. I've been here most of the days since then. That being said, I wanted to also just take a look too at the bond market, which has come off. It had been on the rise over the last few days. It's decided to back off the 448. I was thinking in my head like 4% for the 2-year, 4.5% for the 10-year, and 5% for the 30-year. We weren't quite there, but that's where we were around. Ben, some final thoughts for you.
Well, I think this is yield seeking, and I think it speaks exactly to what Alex was talking about, the fact that there's a bigger volatility name in individual names out there in the market, and I think that suggests that investors, both institutional and retail, are looking for biggest bang for their buck, and it's not the bond market right now. They're moving out of that, and you're starting to see it happen in some of those individual names, and I think that's going to continue until we see, some kind of structural or fundamental change in the way that this yield really is behaving at this point, Nicole.
All right. Well, thank you both, gentlemen. A great day here on Wall Street for the folks because they like seeing some records. Not the shorts, but most folks like seeing some records for the NASDAQ and the S&P today. Thanks for being with me. I'm Nicole Petalides, live here on Schwab Network every single day. Opening bell at 9 and 2 o'clock. I'll see you for the watch list. Morning Trade Live. Sam Bottom.
He's got your smile, Carl. Yep, your #1 broker is here to welcome your new little dependent. Actually, we invest with Schwab. We have everything we need all in one place.
I can set up for college fund.
I've been learning about trading strategies. Schwab helps regenerate retirement income. All this Schwab is everything you need is making me crazy.
Who's gonna be the dude shorting the market, though? That's the question. Market is going up.
With Schwab.
He think it's gonna pull back. The
Schwab
market is
coaching
going straight
is
up.
concepts
What's the
brought to
catalyst?
life in the real world.
Schwab coaching
Who gonna short the market on that?
It's
No
relatable,
news, no catalyst.
clear,
Market's going straight
understandable,
up.
and hopefully entertaining. Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable,
Well, they better,
individualized,
if they're gonna short that market, they better short it with some
growth, and
precision.
empowering.
It's really a human
And you
touch
better not miss.
with your investing. We have coaches who have been
Market
in the
offer
industry
given.
and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
Hey, why you come to JP them party yesterday, bro? You didn't say nothing.
You outside of the
I
class.
thought you was trying to say I was the coldest in there.
That could add to this trade, so we shall see.
We have different formats because people
Yeah, I can't
learn
stand them
differently
dudes,
at
bro.
different times.
Somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every
Ain't nobody else to chill
We've
with
got
either,
this
bro.
Ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
I'm about to start hanging out with my chess friends and my YouTube and Twitch friends. Shit, keep hanging out with
We're going to be
them.
able to help you, regardless
And they
of
keep
where
saying the
you
N-word,
are on that path.
and they keep being mean
Education
over
is really unique, not just
to
that
each
it
other and all
exists,
that.
but
Get
that
that
you can
stuff.
tap into 30
It's a
some
positive
hours
space.
worth of it each and every week. How incredible is that? And it's
I don't
free.
even know how to tell no jokes and have fun over it. But I've been hanging out with them. I ain't gonna lie, cause I be bored. I don't got nobody else. I be trying to hang out with Be Nice, and they keep kicking me out the party.
Insights, action. Listen.
I just be trying to play
Schwab
the
Network
game. You
connects
get
the
me?
headlines to the watch in real time. Watch free 24/7 at schwabnetwork.com.
Later on, I might go to sleep though. Might work out. I want to go get some shoes. I finally got my payout from Twit. I'm gonna get me some shoes. I don't got no shoes for the spring or summertime. Alright. We tapped the all-time high, and I think we might come back down now. Is there time to come down?
Good morning, everybody, and welcome to Morning Trade Live. I'm Sam Bartis, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour, so here's a look at what is coming up. We will dive into some fresh data this morning with jobless claims, retail sales, and business inventories being released. We'll also look at the macro outlook and discuss the tension between productivity and volatility in this market. And over the next hour, we'll have example trades for Cisco and Applied Materials. Cisco reported earnings after the bell yesterday and had another big announcement, while Applied Materials is up this morning ahead of its earnings report later today. Let's take a look at where markets stand. It's been another record-setting day this morning for the S&P 500, with our Dow reclaiming 50K. We're just below that right now. You can obviously thank Cisco for that. We are seeing a nice rally in that name. We'll discuss the earnings and the reaction, what the sell side is saying this morning. Later in the program, we've got some nice gains here, it looks like, for shares in Boeing as well this morning. Well, actually, it is lower today right now. But we do have, as I said, the new records as we have that set here now for the S&P 500. Once again this morning, 0.3%. The NASDAQ 100, 0.3% higher. Another all-time high here for NVIDIA. We've got the stocks up as well. So we're seeing chips continuing a rally mode this morning, although a little bit more selective today. We've got Micron and SanDisk underwater, and Intel is down 3.5%. We've got pretty much all the Mag 7 down in the red, all but NVIDIA and Meta right now. So we'll continue to keep an eye on that, but the Russell 2000 is under a little bit of pressure here. Of course, we continue to track a triple-digit oil and yields pushing higher, although suffice to say they have come off a bit in the session this morning. Let's take a look at foreign markets, because obviously a huge meeting playing out in Beijing right now between the world's two biggest economies. That is no doubt having ripple effects across global equities right now. We had a nice session out in London. We, of course, are tracking the political uncertainty over there. The DAX sitting up 1% right now. We had a bit of a softer session out in Japan last night. Nikkei 225 underwater by 1%. And the Hang Seng Index was actually just on the line. In fact, Chinese shares did underperform across the region. They have been sitting at 11-year highs, though, going into this summer. We'll explain a little bit more of that throughout the course of the program. But for now, let's take a look at some of these futures products, because we did get a lot of macro updates this morning with claims, retail sales, import and export prices coming in a tad hot. We'll discuss that with KG in a second, but we've now had the 10-year yielding at 4.44. So as I mentioned, we've come off a bit, but if you take a look at the 30-year, we're still north of 5%.
Damn, look at Pope,
come off a bit as well, but the US dollar index continues to hold firm here at 98.56. Gold's lower. Crude oil's come off as well, but we're still just on that triple-digit line of $100, and Bitcoin continuing to lose some steam here as well. We are now south of that 80K mark on the cryptocurrency. So that's how we're looking as we get set up for this day and reacting to more earnings, more data, as we mentioned, and obviously the China meeting as well. But futures that managed to hold the gains going into the session, of course, then we come into new record highs as well. So let's get out to KG, who joins me now for a quick look at these markets. A quick market thought for us, first and foremost, Kevin?
Well, we started off relatively strong here. We continue to gyrate. I think the market is continuing to kind of double down and rotate within that tech sector, with NVIDIA still seeing some positive signs of life. And then if you look on the other side of that, Microsoft is looking at some weakness, trading at around that $400 level. And I think today is a little bit different than what we saw the other day, the last couple of trading sessions, if you will. Financials actually in the green, given the fact that we have seen higher interest rates, we have seen the financial sector moving back a little bit. That actually does have a major impact when it comes to the overall S&P 500, especially if you do not have information technology and communication services participating in the same direction here. Volatility, relatively muted. It's sitting at around 18 or economics data that showed that we have some hot inflationary pressures in the market, and they're still focusing on that AI trade, and the capex spend from the major hyperscalers is really driving a lot of this action to the upside.
Particularly as you continue to see most of the chips in rally mode for us this morning. But let's talk about some of the macro data we did get this morning. I mean, claims to 11K at the headline, so above what expectations we're looking at, but still low by historical standards. The retail sales, I sort of want to focus on that because obviously come off the 1.6% we saw in March, but I know that obviously the control number is important there, coming in a touch better, that feeding into GDP. Just walk us through your takeaways with some of those data prints this morning.
Yep, so we did see retail sales both when you're looking at the headline as well as the core coming in relatively strong here. Core retail sales increased by 0.7% on a month-over-month basis, matching the street's expectations, coming in a little bit lower than what we saw for last month at 1.9%, but that was more of an outlier when you see that type of month-over-month growth here. And for the headline, we did see that one actually coming in at 0.5%, matching the street's expectations. Retail control group came in at 0.5%. Street was looking at 0.4%. Now we always have to provide this little bit of a caveat here. Retail sales is not inflationary adjusted, so we have to also be mindful that the gasoline sales and the gas station receipts, which did increase by 2.8%, is going to also fuel retail sales to move much higher as well. What was also very interesting within this report, restaurant and bars, it actually saw an increase of 0.6% on a month-over-month basis. Now, is that because of higher prices at these restaurants or bars, or is that because we are getting into the summer season and individuals are going out and spending more? I think it's probably a combination of both. So this is actually a bright sign here if you're looking at it from the Fed's point of view. The market has not seen a breakdown in consumer spending as of yet for certain segments of this market, even though we do still have inflationary pressures on the horizon. It's also being reflected in the PPI number.
Yesterday, I was looking
so I would say overall, really good report when it comes to retail sales.
But today,
things are holding up, as you say. What about these import and export prices? I mean, that came in pretty hot. I mean, export prices are double expectations. Year over year, what, 8.8%, and imports ex-petroleum 0.7%. You'll get 4.2% year over year as well. I mean, does that just sort of add to that sort of sticky inflation picture that we continue to see here?
Well, I would say actually both of those price points, imports as well as exports, actually have been running a little bit hot for the last couple of months if you're looking at the month-over-month comps here. I think it's not a surprise that transportation and logistics has gotten very expensive, not only because of the gasoline, but also when you're looking at fuel oil, and then the constraints that you are seeing for the shipping routes in general around the world. There's kind of a mismatch when it comes to where current cargo is and where it needs to go, and different routes that it needs to take in order to try to avoid the Strait of Hormuz and or to make it economical transport.
What were they doing to lift?
That's also fueling this. And then last but not least, you're also looking at tariffs. Now, tariffs are not actually directly impacted when you're looking at these price components, but it also could signal that a lot of these producers are passing on that tariff cost to the consumer, which will be reflected in these numbers.
Yeah, okay. Makes sense. And obviously, we'll hear the highest numbers since 2022. Have we got those business inventories yet?
Business inventories actually came in at 0.9%. That's an increase on a month-over-month basis. This is for the month of March. Street was looking for 0.8%, and last month we saw that coming in at 0.4%. This is actually a really good print, and in fact, if you do want to see inflation move lower, you would like to see business inventories continuing to ramp up to the upside here to force a lot of these retailers and these businesses to actually push prices lower. There's kind of a counterbalance type of an effect here, but overall, this is actually, I would say, a pretty decent print from the inflationary front. Retail inventories ex-autos came in at 0.4%. That was better than the street's expectations at 0.5%. So we've actually been holding up relatively well. We have not seen a definitive trend when it comes to business inventories, rather increasing or decreasing here over the last 6 months or so. It's been relatively steady.
Yeah, okay. Let's talk about this China summit. Obviously, no deals or deliverables just yet. I mean, I've covered my fair share of these things, and we don't typically get these till like the last minute. I mean, particularly when Trump gets on that Air Force One and heads home, he'll probably likely make some comments. The Chinese state media cogs are often quite slow to turn, so no doubt we'll get something by the way of a statement tomorrow. But I did hear Besson, and you and I have been talking about this in recent days, hinting at a potential deal for buying more energy as well from Reuters, although we know that the US green light is not the problem, it's Beijing. That's the issue right now, not allowing those companies to actually purchase those chips. But what have you sort of taken away from all of this so far?
Yeah, I would say the energy purchases is probably going to be a longer term, time frame when it comes to a deal there. Obviously, we would like to see the China actually import from the United States in some respects, but that also could actually disrupt some of their influence when it comes to the Middle East, as well as Africa. So that's going to take a little bit longer of time here. You also have to be mindful there is some export facilities in Alaska that's being built out right now that actually already still has a significant amount of China interest when you're looking at stakeholders. And so they already have a little bit of exposure in Alaska. So this could also be a little bit more of a political move rather than something that's strategic for the diversification of their energy imports. Some of the other news items that I'm seeing as well.
30 grand.
Talked about the approval for selling these H200s to China.
Right, and Bank of America is gonna give us 30
this
grand.
headline over the last 5 to 6 months. I remember
Hey,
I was at
Fuzzy
an airport
looks.
about 6 or 7 months ago.
How we gonna get 30 grand?
On this news headline, it continues to get recycled here. But it looks like, according to this Reuters report, we have a little bit more details. The approved
I ain't gonna
customers
get no 30 grand from work.
75,000 chips, and some of these customers are Alibaba, JD.com, Tencent. But you're right, there has been some soft restrictions in China in order to kind of collect some of these H200s coming into the country. And we'll see if this actually does transpire into a deal. There's also another report that around $30 billion worth of goods from both countries, the U.S. as well as in China, they could be earmarked for reduced tariffs. It seems like that, once again, may take a little bit longer for us to get the details of that, but there wasn't anything that was actually a really big headline mover when it came to this particular summit. And in fact, if you look at the commodity complex across the board, you are seeing pretty much every single commodity today is actually in the red outside of live cattle and feeder cattle, which does sound like they want to be able to try to make a deal with China on that front. But you're seeing soybeans to the downside, wheat, corn to the downside, palladium, platinum, silver. You name it, because of commodities probably to the downside today. The commodity traders wanted to see a little bit more when it came to concrete actions, as well as some updates to imports and exports of a lot of these raw materials. That just did not take place here today. Technology trade is catching some fuel on this summit, but not so much on the physical commodity front.
Yeah, okay. Well, for now, at least 2 hours of talks in Beijing. It looks like positive and constructive. At least these two sides are managing to keep a floor under this relationship, to not allow it to spiral further out of control like we saw last year. So I suppose that's the good news and the takeaway we can take so far. But KG, really appreciate the nuts and bolts of it all, and of course getting us through the macro data in these markets for us today. Coming up, we'll take a closer look at more macro themes in this market. Morning Trade Live is back after this.
That looks good. Cool. They came down like 40 cents.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible.
That
It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like,
you know how hard it takes to get a sub and a follow-up from these
everything
rascals?
investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full-service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Schwab. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
But soon as I looked at that chart,
Trade live, Starbucks
that weekly chart, that big chart, that's what set it up.
With a price target of $120, up from $106. The firm sees Starbucks having numerous drivers for positive sales revisions and expects margins to recover as the company prioritizes labor investments. Starbucks is up nearly 30% this year, and a nice little pop today, getting a little caffeine hit. Why not? Up 1.5%
they did
right
pop
now
up
for
some.
Starbucks. Let's take a look at this leaders board. No surprises there. Cisco Systems, after this really nice report and earnings we got yesterday. We'll unpack what happened there and some of the reaction, but we're seeing a nice response from the street today, up 13.5% or so. HP Enterprise also up 4.5%. Take Two Interactive up $5.6 tree right now, up 3.3%. Let's take a look at what is heading in the other direction on the S&P 500 today. Amongst the losers here, Albemarle in the business of lithium down 5.6%. Akamai is down 3.8%. First Solar down 2.5%. Coinbase down 1.4% as we are seeing Bitcoin prices under water for us this morning as well. So that's a quick snapshot of what is up, what is down in the markets today. Let's talk about the macro now with Darius Dale, founder and CEO of macro research firm 42 Macro. It's been a long time, Darius, my friend. So thank you so much for joining the program here. Look, all the data we've got this month has shown that things are holding up. I mean, even the retail sales today, claims looking okay as well. I mean, things are looking resilient. They're looking stable. Given what we've got on the macro side and the corporate reads we've got this earnings season, what has been your takeaway as to the macro setup right now?
Yeah, thanks again for having me. Always a real pleasure to be here, Sam. So the first thing I'll say is that you got to take the 30,000-foot view. We're still in a risk-on market regime. We expect markets to be generally bullish over the next 3 to 12 months. However, when you look at the next 2 to 3 months, we're starting to see things from a macro standpoint that are mispriced relative to broader asset markets that could cause some trouble.
I lost my lighter.
For starters, the Fed is lagging well behind its peer central banks in terms of the amount of tightening that is priced in over the next 12 months. So we could see a catch-up trade in the coming months as the Fed and Kevin Warsh and his colleagues on the Fed readjust their reaction function to what is a very clearly very hot core inflation dynamic here in the U.S. economy. Now, on the flip side of that, as evidenced by today's retail sales print and some other data we've received in recent weeks, the U.S. consumer continues to be fine. The U.S. economy continues to be fine. And so ultimately, we think markets resolve the next couple of months of potential volatility positively, but we do believe that we could be seeing some vol in the coming weeks and months.
So what do you think would be the catalyst then for the Fed to remove that easing bias, given, of course, this repricing we see now of the markets now thinking, perhaps we could be in for a bit of a rate hike come 2027?
Yeah. So the catalyst is already on the table. It's already been prepared. If you look at, for example, trim mean CPI, which is what Kevin Warsh highlighted as what he wants to pivot the Fed's reaction function to, trim mean CPI is in a strong positive impulse right now. That means the 3-month annualized at 3.4% is greater than the 6-month annualized at 3%, which itself is greater than the year-over-year rate of change of 2.9%, which obviously is well above the Fed's 2% target. And so the first thing that he's going to have to do when he joins the FOMC is stop jawboning rates down and start to listen to his colleagues on the FOMC who have become incrementally hawkish in recent months so that they can ultimately try to jawbone a lot of this rates volatility and currency volatility out of the market by committing to stymieing inflation, the buildup of inflation pressure.
Darius, how do you think the market is likely to react to that, given the clear distinction we're talking about between previous energy shocks and now, and thinking back to 2022, is that, obviously conditions were similar in some ways, but we had a more sort of hawkish rate hiking bias in this system, which is not what we have now. And that is what is perhaps the view as to why we're seeing this resilience in the stock market and these record highs. I mean, how would a market react to a change in that jawboning?
This good right here look good,
probably
though.
Not well. So there's two things that will cause some issues there. One, we have the return of crowdability positioning, not quite where we were in January, but certainly something that it could cause a more material acceleration to the downside to the extent the markets get concerned about these hawkish dynamics. And then secondarily, you have the Fed as well, like I said, is well
banks with respect to the amount of tightening that is priced in. So to the extent markets have to price in more tightening on the short rate curve or a pullback of reserve management purchases, which are annualizing at about $600 billion, then you're going to start to see some volatility creep in. So in our opinion, we're in a very positive tailwind from the perspective of the global liquidity cycle. However, those tailwinds are starting to erode at the margin. At the same time, you're getting a hawkish repricing coming out of the Fed. Those are not good catalysts for markets.
What's the risk of the Fed not moving in lockstep or following on from other central banks? Because arguably the view is that the US is in better shape than the rest of the world. I mean, particularly when you think about energy independence or a less vulnerability, particularly with the Europeans, obviously the BOE, the ECB, the circumstances that they have on their hands right now. I know the Aussies have already hiked a number of times this year in a completely different situation. But what is the risk of the Fed not following suit here? I mean, is this about the dollar?
Well, the risk of them not following suit is exactly what happened in 2021 and 2022. The less they do now, the more they're going to have to do later in terms of catching up and ultimately rejecting this buildup of hawkish inflationary pressures. And the markets are already well aware of those dynamics that you talked about with respect to the U.S.'s relative resiliency with regards to these inflation pressures and with regards to the global supply chain pressures. That's why tech is up 24% since our model signaled that we returned to a risk-on market regime globally on April 11th. 24% compares to, I think, the next closest sector is up, I think, about less than 5%. And so clearly the markets and global investors have aggressively crowded capital into our mega cap growth sector, particularly technology, anything exposed to AI. However, the U.S. is not resilient to the global liquidity cycle. The U.S. is the world's largest net international investment deficit economy. If the supply chains remain broken and the Federal Reserve is pivoting its reaction function in a hawkish direction, both of those things are going to cause a drawdown in global liquidity that would ultimately cause a drawdown or a wipeout in all that crowded bullish positioning in AI trade.
And obviously the AI trade has held up pretty well in the face of these high yields. I mean, obviously with a 10-year at 444 and then a 30-year at north of 5%. But you just wonder how much the bonds vigilantes will push the Fed into a position where, it might have to remove that easing bias as well, particularly if you look at the 2-year. Darius, we've completely run out of time, but fascinating chat. Thanks so much for jumping in and joining us this morning. Darius Dale there, founder and CEO of macro research firm 42 Macro. Coming up, we'll get a closer look at the big picture with the team over at Charles Schwab Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Yo.
How's it going? First day, so sometimes Next. Try it again. You could have done better. Please. Same goes for where you invest.
So just be patient.
Level up.
Some
and
people
invest
probably
smarter
be
with
flying
Schwab.
around that jump.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Intern, this place is incredible. It's where I get all your office supplies.
I hate that.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
We're back on Morning Trade Live. Marvell is up again this morning after closing at a record high yesterday. The company received price target high Charles
right
Schwab
in the
and Colin
50
Martin,
area.
Head of Fixed Income Research and Strategy,
Right
Charles
into
Center for
it,
Financial
let that break
Research.
down.
Hello to you both this morning. Joe, let's just kick things off with you. Record highs once again this morning. The macro data is holding in there. Just walk us through your thoughts today.
Yeah, retail sales data was pretty good. Maybe not as strong as the headline if you dig a little bit below the surface, but the spending patterns are still strong. I think households are being a little bit more selective. We've seen a little bit more of the trade down in terms of their purchase decisions, and as we talked about before, Sam, I mean at some point gas prices are going to make their way into that discretionary spend, and I think you got some hints of that in this recent report. Also, as you mentioned, equities are near recent highs. The thing that I think we need to keep an eye on with that is just the narrowness of the rally. Today actually looks pretty good, but if you look over the course of the week, decliners are actually outpacing advancers 2-to-1 on the NYSE. And then if you look at percentages of stocks with a 50-day moving average, it's only about 50%, and at the same time, when you're looking at stocks that are kind of setting 52-week lows, it's increasing as well too in the S&P 500. So it goes to show that it's a narrow rally, and it's very selective in terms of the winners right now.
Yeah, absolutely. And I was looking at the narrowness of this market yesterday. There was nearly 50 names on the S&P, almost 10% of the index that were hitting the 52-week lows, and yet the S&P 500 still managed to close at a record. I mean, that just really speaks to the narrowness right now. Let's just park that there for a second, Joe. I want to bring in Colin just to get some thoughts on what your takeaways have been from the data. And I don't know if you caught my last guest, Darius Dale, talking about how the Fed could be potentially in a situation where they might have to play catch-ups with the rest of the world, particularly in the fact that they haven't removed that easing bias yet. How are you tying everything together right now?
Yeah, I don't know if the Fed necessarily needs to play catch-up, but I do think it's important to remove that easing bias. When we talk about the easing bias, I think you have to squint really hard in the statement to find what they're talking about. But I think the idea was that they'd been easing for, a year and a half, and that if the implied path is lower, that's where the bias is. Right. I do expect that to be gone by the time we get the next statement. I mean, where we are right now with inflation still too high and reaccelerating, the idea of rate cuts shouldn't be something we're talking about. And it shows how much the rise in oil and gas prices is playing a role here. If we just go back 2 or 3 months, we were expecting the Fed to continue cutting. Now we shouldn't even be having that conversation. We don't think the Fed necessarily needs to hike from here. I think we'll need to see core inflation readings move meaningfully higher, or inflation expectations move higher. We know the Fed's focusing very much on those expectations because that can result in some sort of self-fulfilling prophecy. That doesn't appear to be the case right now. And I think we need to see a strengthening of the labor market, not just a continued stabilization, but a strengthening for the Fed to really hike rates, knowing that the labor market could withstand that. And Joe made a really good point before. When will we start to see, or if will we see the hit from higher gas prices into other discretionary spending? So far we haven't really seen that yet, but it's going to be important to look over the next few months how the consumer is holding up, knowing that we're still seeing those elevated gas prices.
Yeah, and as Ed Yardeni wrote this morning, I mean, that bias is becoming increasingly difficult to defend. I mean, to your point, Colin. Just getting back to you, Joe, and this narrowness, I mean, what do you think would be the catalyst for some broadening out, like we came into 2026 with, which seemed to be quite optimistic? And I don't know if you have an answer to this, why semis are almost trading as like this sort of safe haven, given all this uncertainty, and like a defensive trade?
Let me take the second part first, because I think, investors are chasing earnings, and they're chasing margin expansion, and they're chasing growth. And right now, that's where they're seeing it, specifically in the semis, the memory chip makers. Look, Sam, I'll be frank, I think there's a little bit of some chasing there, maybe a little bit too much. And because some of these parabolic moves, not only are you seeing it from buying the underlyings, but you're also seeing it from buying the calls as well too. So you're seeing a lot of upside call activity within the semi space that's pushing it to these huge moves. The other part, when do we see the broadening out of the rally? I think that's interesting. I think when you start to see earnings continue to catch up in the other sectors. I mean, they've been really strongly based within technology. I think if you see interest rates come down a little bit, you might see more participation there. But at this point, one of the few things the
honest, I'd expect to hear more about his views on the dot plot, the summary of economic projections, how frequently Fed officials speak. Right now, we don't have anything concrete, but it's going to be an interesting few weeks.
Yeah, for sure. We'll be watching. Gentlemen, always a pleasure to have you on. Thanks so much for joining me today. Joe Mazzola there, head trading derivatives strategist, Schwab. Scott Martin, head of fixed income research and strategy, Schwab Citizens Natural Research. Coming up, it's time for the morning trade, and we will take a closer look at Cisco after this earnings report yesterday. Morning Trade Live. We'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. While others recap the news, I help you read between the lines from what's moving markets to what's next. With sharp takes and market know-how, follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
We're back on Morning Trade Live. Let's focus on the chart for Cisco. As you can see here, it's been an upward climb off the back of this really nice earnings report we got yesterday. We are up almost 15% right now, continuing to march higher, trading at 116 and change. The company out with, of course, another big announcement as well after the bell yesterday. So let's focus on this for the morning trade. Joining us for a closer look now is Marley Kane, my co-host on Market on Close, who was obviously breaking down these numbers yesterday, and they look pretty good. Just walk us through this subsequent announcement that we got. We're seeing the reaction from the street. What are the sell-side analysts saying?
Good morning, Sammy. A pretty good feels like an understatement here for these numbers for Cisco. Seeing an almost 15% move to the upside here. They were up and after hours trading as well. After the issued results that topped expectations and also their guidance. They had a beat and raise quarter. Just really good numbers here. The earnings per share came in at $1.06. It was only 2 pennies better than expected, but still better, $1.04. Revenue was up 12% year over year to $15.84 billion. That was better than about $15.5 billion that the street was looking for. Net income also higher, $3.37 billion, up from $2.49. Now, Cisco makes most of its revenue from its networking segment, and that has surged because of strong demand for the hardware needed to help power AI. Networking revenue in the quarter increased 25% to $8.82 billion. That topped even the expectations that were already high for $8.44. And for the fiscal fourth quarter, Cisco is calling for $1.16 to $1.18 in earnings per share on $16.7 to $16.9 billion in revenue. Both of those ranges well above the estimates that the street was looking for. But a really big standout here was their orders. The company said that they've received $5.3 billion already in AI infrastructure and hyperscaler orders. That led them to raise their expectations on orders for the fiscal year up to $9 billion. That's almost a 2x increase. Their previous projection was about $5 billion. So that was a number that when it came across, we saw a sharp reaction to the upside. They also said that they expect to see fiscal year revenue in this market of $4 billion. That was up from a projection of $3 billion. So a lot of increases here in terms of its expectations to the upside. And as you know and highlighted, Cisco has trailed some of its data center peers in the AI race. It took them until December of last year to top their dot-com era previous record highs. But since then, it hasn't stopped. I mean, it hasn't looked back. We're up more than 30% as of close yesterday, significantly topping the NASDAQ's 14% advance in that same time period. And if the stock can maintain this move that it has right now of north of 14%, it will mark its sharpest rally since 2002, Sam.
I don't know who was hating on but they were watching now.
So, starting like the early 2000s, it seems. I mean, this stock has been incredible. I mean, what this company has managed to do in the time that it's been around. Thank you so much for the earnings snapshot there, Marley, and the reaction we're seeing in the market today. Let's trade this name now with Joe Gates, portfolio manager of the Rational Equity Armor Fund. Joe, just walk us through your example trade for this name, given this exceptional quarter here, and obviously the nice reaction we're seeing in the market
today.
Make
a whole new high on people.
Yeah, you bet. Exceptional quarter.
It's a name
downgraded it.
that still, relative to
And
some of its
they
peers,
very
is
bullish, and they really
comparatively
going
cheap
to the
for a
hundreds.
22 PE.
And
That's
then
up
you're
a
gonna hear
lot from
Schwab
where it's been, but
Network talking
still,
about
you could say, hey,
Bloomberg,
there is room to
all them
grow
people gonna
from
be
that
talking about him. They're
perspective,
gonna be
because
like,
the
hey
bottom
man,
line is,
that
yes,
dude
beat
Frost was
and
some
raise,
coach, bro. I was
and
watching his
they're
shorts,
focusing their workforce,
and
cutting
he was
some
talking about
jobs,
PL the whole
focusing on
time, ever
cybersecurity
since
and the
$6.
AI growth. So
And
Wall
now
Street is
PL
just loving
upgraded
everything that they've
$50.
seen from Cisco. But
And
that said, anytime I
I'm
see
gonna
a
bring him
stock
on the
up
show.
18%
And next thing
in
you
a
know,
day,
you're gonna see Frot
it
on the
just
show.
is too much for me to want to jump in here and
You
chase,
get me?
even though I love it.
Chopping
It
it
would be
up.
something that I've been looking to get back into on a pullback, and an effective way for me to do that is with a cash secured put. Looking out into July at 105, I can sell that put for about $1.87. So something where if we came back here close to where we were before the earnings report, I'd be buying Cisco back. Otherwise, I get to collect these premiums and just kind of wait for some consolidation here, because typically you either get that in after a big ramp up like this, you either get some consolidation sideways or you see some price correction downward. So I'm looking for one of those two things to happen. If it does go down, very happy to buy it.
All right, good look at Cisco today off the back of these earnings. A nice pop and rally for the company today. Joe, always appreciate it. Thanks so much for joining us. Joe Tigay there, portfolio manager of the Rational Equity Armor Fund. Coming up, we'll take a closer look at the sectors on the move this morning and the international headlines we're tracking in global markets as well. Morning Trade Live will be right back. Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only
I
on
wonder if the
ShopNet.
Q is gonna be above this 5, bro. For real.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Q's probably gonna mess around and be 1,000, boy.
Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable content. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Welcome back to Morning Trade Live. I'm Sam Bartis, coming to you live from the New York Stock Exchange. It's time now to take a look at some of the sectors that are moving markets this morning. So I'm joined by Alex Coffey over in Chicago. Good morning to you, Alex. What stands out to you? An hour and 10 into trade right now.
Yeah, what stands out to me is that this is a day that is really improving as the morning rolls on. You now have 60% of the S&P 500 and roughly the same number of NASDAQ 100 components higher on the session. You look at the sector breakdown, all but 4 of the sectors are higher on the day, with the worst performing sector being materials, and it's only down 0.75%. So all in all, Sam, a nice little session brewing here as this market continues to take, 5 steps forward for every half step backwards it's taking. And it's really interesting, and I know we have a DSPX chart here up on the screen, and this really, to me, illustrates what's going on under the surface right now, which is that the index level volatility is relatively contained. The moves are relatively small. It almost seems consistent upside movement. You look at the NDX, you look at the S&P 500, it's almost like you could count on one hand the number of red days we've had since the beginning of April, and they've been very short-lived in terms of those downward pressures. But under the surface, there's quite a bit of volatility, and the difference between individual component volatility and that index volatility. Another way to say that is we actually have a lot going on from a stock-to-stock perspective, but it's sort of balancing out, and it's led to a really nice upwards trajectory for the index. But it tends to be pretty swingy in some of these individual stories, particularly the ones that are tied to AI.
Yeah, absolutely. And there's been so much conversation. Joe and I were just chatting about this as well, around the narrowness in this market when you look at the decline advance each day. I mean, you know, obviously we've been tracking that as far as technology very much leading the way, and in rally mode, chips as well. I mean, that seems to be very much the case again in the session right now. Just walk us through the Mag 7, because you actually have quite a number of them dragging their feet today, although NVIDIA's obviously hit another all-time high today as well.
Yeah, when you look at the Magnificent 7 today, Sam, if you were to index that group and take a look at them, they would actually be contributing upside pressure, because they're up about 30 basis points, 0.3%. But it is almost entirely NVIDIA, to your point, as NVIDIA's up another $9 and making a run here. 2 for 35. It wasn't that long ago, maybe a week or two ago, NVIDIA made that jump, new all-time high, and gave it all back and was sub 200 again. Well, that seemed to be the ultimate fake out, as this stock is now almost 20% higher than that mark, so it continues to make a run. World's biggest company, most valuable company, and it's right now contributing quite a bit of upside to the performance today. If you were to look at the index level contribution, NVIDIA right now with this 4% move, $9 to the upside, well, it's contributing 25 points to the upside. It's also dragging names like Broadcom higher, which is contributing another 11 points. So with the S&P up 45, you could say about 75% of that move could be attributed rather just to NVIDIA and Broadcom.
Yeah, and you wonder how much of this has got to do with Jensen in China. I mean, obviously ahead of earnings, or just a catch-up trade, as KG has been pointing out as well. But yeah, a nice pop, as you say, up 4% right now. Alex, really appreciate it. Thanks for jumping on and helping us unpack some of the sectors here. Turning to the price action out in Asia, stocks in China underperforming the region as Trump and his team met in Beijing. Mainland Chinese stocks have been trading around 11-year highs going into this summit. Shares in Baba rallied nearly 8%.
What is going on? What is going on?
Here for U.S. listed shares.
People want to go to work. People want to play the game all day.
Around 10 Chinese companies, including Baba, Tencent, ByteDance,
Well, the market flying.
and have been cleared by the U.S.
While the market doing what it's going to do, what it want to do.
Yet no deliveries have been made so far, but the U.S.
Yeah, MSCI about to touch 200.
China has also blocked domestic companies from buying the chips as it tries to support homegrown technology. So nothing really new about that. But the South Korean coffee
and I'm sick of Apple's. Apple tried to calm down here. Look, Apple was flying like I'm just sick of it. Who holds losing trades? And then they end up backing out.
$66 billion in market value the day before amid a dispute over worker compensation. South Korea's finance minister says the threat of a strike by the union would pose a significant risk to the economy, exports, and markets. We've got the South Korean ETF up 8 to 10% right now. And watching over-the-counter shares of FrostFam this morning after the Apple and NVIDIA suppliers got a 19% jump in Q1 profit compared to last year to $1.58 billion, beating expectations. The world's biggest contract electronics maker reiterated its strong growth forecast for revenue this year as it's seeing solid demand for AI, particularly servers. Coming up, it's time for Inside Out, and we'll take a closer look at semiconductor equipment suppliers and bring you an example.
We told China we're a man without it.
Materials, which reports earnings this afternoon. Morning Trade Live. We'll be right back.
We told China that.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400
now they
branches.
want to go at 10:45. They want to go.
So you can invest your way.
At 10:45, everybody want to go.
I'm Alex Coffey. And I'm Jenny
Keeping her
Ford.
mad and
This
shit.
is
Yeah,
Next
look.
Gen Investing, where we track the trends
I told him to come down here to
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Talking about what's
Clear
down here.
analysis and forward-looking market coverage
you could have been
every
down
trading
here.
day.
This is a for break level
Shit.
for this stock.
Come down here
That
and
could certainly be a
then
short
got
to
into it.
near-term catalyst.
Next turn investing, 1 p.m. Eastern.
Only on Schwab Network. My parents didn't really talk about money at all.
Hey, look, make sure you guys, for real, I keep telling you about the Earn app, bro.
I didn't want anybody to find out that
This is passive income for life. I don't care what y'all talking
using
about.
credit cards to do anything.
I use all this little money for shirts.
$20,000 in credit card debt.
I told y'all
That's when
that.
I kind of realized, like, all right, I have a money problem.
I'll put the link down here in the description.
This is about how
so you
my
can come up here and
finances got
get you.
wrecked and how I
Look,
fixed it.
come
If
up
I
here
could
and
do
get.
that,
Look,
you can do it
I'm
too.
telling y'all that, boy.
Real-time
some
access,
payouts.
data-driven analysis from U.S.
Payouts,
equities
boy. I
to
keep
global
telling y'all
macro
that.
matters. Schwab Network connects the dots. Watch live.
Keep telling y'all that,
Subscribe
boy.
free at schwabnetwork.com.
And I ain't playing with them, boy.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Morning Trade Live, focusing on semiconductor equipment suppliers this morning. So we've got KLA Corp, Lam Research, ASML, and Applied Materials all higher ahead of AMAT's earnings later today. So that's putting on 1.3% right now. And if you take a look at a longer-term chart, in fact, this stock has been an impressive one, actually, up 182% since the lows back in September. We did see shares hitting an all-time high on Monday before a bit of a pullback across the entire sector. But as we can see, we're back in rally mode for chips in the last two sessions. So the equipment makers and those behind supplying
I can't stand this trading stuff. It's so frustrating. People be thinking it's easy, or you make a lot of money.
President Futurum
Boy, you gotta take
665.
what that
Ryan,
money
thanks so
giving
much
you,
for
boy.
joining us.
You gotta take
Just
what that
walk us
money
through
giving
your
you.
expectations
Market
for
will
this
always be
name.
giving you straight up shit.
You know, I look at this and I see everything else rallying
That's
around
why
it,
I
and
keep
Applied
telling people,
Materials
you
is
gotta
one
get
of
some
those companies
shares.
that produces,
Shares
even
and
at a lower
shares and
level
shares,
of
and you educate yourself.
TSMC, all of the technologies that are kind of building into this AI
You know when to hold
infrastructure
them, you know when to fold them.
So I expect them to kind of follow along with that same
Spider
trajectory,
is
right?
going
They have
banana,
some
boy.
better upsides. They have
That's
some
why I said,
differentiated
whoever's
risks
trying to short the
in their
market,
profile as
boy.
well. But I think overall, I see no reason
Look
why
at
they
that.
won't follow the same trajectory.
Okay. Well, what are they likely to say, do you think, about China? Because I know that they had some, obviously, exposure to that that's been lagging in recent years. I mean, just walk us through how much we should be paying attention to that in this earnings.
Cost averaging.
I feel like they've built that into their projections and earnings over the last quarter or so. They did pay out their penalty that they had to pay for the transgressions that occurred in the 2019 to 2022 realm. And I think that's kind of behind them. I still think the restrictions and export restrictions into China are a risk factor for them. I'd probably put that as the largest risk factor. And I think, you know, there's a possibility that some of this is a
go like 1%.
conversation for the president of China this week.
I mean, things is pulling it up.
Absolutely.
So
what are you going to be looking out for as far as the metrics and the language on that call that we should be paying attention to the most?
I think it's all about what do they show in terms
of
their
trading,
revenue guidance
at
for
like
the next quarter. Are they going to be above or below this 20% growth rate that the market has kind of been looking for? I see a lot of their benefits that are going to help them extend beyond that, right? If you look at their capabilities and the technologies that they develop for leading-edge process technology, the HBM and memory boom, but also kind of their advanced packaging that everybody's using. I see no reason why, based on every other beat and raise that we're seeing across the board, that they wouldn't do the same.
Okay, understood. And given everything we've heard from the other chip makers in this space, or at least those in the business of semiconductors, I mean, it looks like the earnings has been backing up what we've seen as far as this record rally in the stock market. How would you paint the picture of the chip trade right now and valuations? I see this trades at a forward PE of 36 times. Slightly higher than the rest, but I'm just wondering
really think he's too good for people.
What you make of the entire trade right now, given this rally.
I was looking this up today, and Applied Materials is still kind of below forward earnings ratios than their competitors like Lam Research and a couple of others. They're in line with kind of the ASML, TSMC's
of the world, which I think makes sense because they're one of the primary
Hey, yo,
kind
last.
of competitors, augmenters, suppliers to a lot of those organizations. And if you think that, you know, the demand and need for these chips and new accelerators
Well, you just touched the
from
1%.
TSMC
I
and
mean,
even
you
Intel,
just
which
went
they
up
ramp
there
up
and
their
then try
foundry
to break
side,
even
like Applied Materials is
on
the
the day.
primary provider of
Y'all right
solutions
there.
for a lot of those key processes. So I think they
Calling
have a lot of headroom to
calling the
grow.
Warren Buffett gods.
Okay, that's good to know. And I mean, you know, obviously we've seen a lot of these companies hitting all-time highs, particularly
All
going
the
into
Michael,
earnings. I'm thinking
whoever.
about a lot of the memory makers in particular.
Hey, good morning.
And they've managed to clear the bar when they've reported. I'm just wondering, given this one hit an all-time high earlier this week,
Well,
how high is the bar for this one
trying to make some money,
to jump
get
over? Do you think
liquidated.
it can pull it off? And
Over
do
there
you think
talking to chat.
there's further room for some upside tonight?
I do think there is. I think if you look at the
ready to get to
memory
it.
vendors in particular as an interesting case study for this, Micron, SK Hynix, you know, they're continuing their all-time highs and growth trajectory.
The market is
and
making
Applied Materials
the new
has
all-time
a
high. What is
significant,
going
50%
on?
or more share of wallet in some of these
Shit.
HBM production technologies, and so I expect them to
Just
follow
flying
along.
high jump.
Okay, and obviously HBM has been pretty hot recently. Ryan, we have to leave it there, but thank you so much for the preview. Ryan Schmaltz there, President Future of Signal 65. Appreciate your time. Let's trade AMAT now with George Silas, a Senior Markets Correspondent at Schwab Network. George, good morning to you. Just walk us through an example trade ahead of this earnings this afternoon.
The trend in AMAT, it's very bullish. There's possibly a trend continuation post earnings. We're seeing a lot of big names that are already moving higher, just continue higher. Looking at Cisco today as an example. So if you look at the market maker move, which is essentially 1 sigma or 1 standard deviation move expected for AMAT, it's around $32 a share.
MSCR is
price
doing.
approximately
You know why MSCR is
$140.
doing that?
What I'm going to do is I'm going to structure a bull call butterfly spread. So in this case,
I'm be on for the rest of
basically
the
going to buy an at the money 440 call, and I'm going to sell 2 of the 475 calls against it. And again, just to clarify, these expire tomorrow. So that set 475 is essentially about $35 away from the 440 call, which is outside of that market maker move. And then I'm going to tap it off by essentially buying a 520 call. So that one is about $45 wide. So it's sort of an unbalanced call butterfly. And what this has done is essentially allowed us to participate if the stock goes higher up to approximately the 475 level in a cheaper way to do that because the implied volatility is very cheaper. So again, buying 440, selling of the 2 475s, and then buying one of the 520 calls. So you put all this together, it costs you about $6 a share in debit or $600 a contract. So the whole premise behind the trade is essentially to hit 475. That's ideally the sweet spot in this trade, which is right outside that market maker move. But you have to consider the risk and return. There's a whole range of returns possible. The max return on this trade is $2,900 for $600 in risk. And that occurs if the stock hits 475, but your break even, in this case there's 2 of them, 446 on the high side, and then again if you look at the upper bound, it's 504. So you really want the stock to hit the 475 or approximate market maker move, and that would achieve the max profit, but again within the confines of the break-even prices of 446 and 504, there's an entire range of profitability.
Okay, AMAT currently trading at $441 and change heading into this earnings. Things are looking pretty bullish, as you mentioned, George, heading into this. I mean, looking at the analyst consensus here, you've got a major cohort in the buy camp at 9 with a strong buy as far as what I'm seeing. So we'll be watching this report later this afternoon. Thanks so much for breaking down the example trade for us this morning, George. And we have, of course, the records for the S&P 500 once again today. The Dow managing to reclaim 50K, as we can see here. We've got Cisco shares really taking us higher. The Nasdaq 100 up 0.8% as the chip rally rolls on. Thanks for joining us here. Trading 360 up next with Marley.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Y'all should start getting excited looking for it. We're talking about the Clarity Act, the Digital Asset Market Structure Clarity Act of 2025. The Clarity Act for short is designed to provide. Okay, my article cut off. Creating clear rules for crypto. Somebody was talking about crypto. But crypto might be the future. Definitely the future. invested all that.
As they grow
How
globally
bad it is.
and increase profitability through greater scale.
Sorry,
Again, reiterating their full-year financial outlook after what they frame as a positive first quarter performance to start the year.
Yeah, I mean, it's very interesting too. I'm glad that you pointed out also it's a cheaper stock. I mean, just trading about $9 over, right over $9 right now. So that 20% move will be less significant than say an Nvidia 20% move here. But as we're looking at StubHub, it's really interesting to see these numbers and the reiteration of the guidance alongside a lot of the headlines that we're getting recently of people canceling their tours or their North American legs because people are just saying ticket prices are simply too high. So StubHub's showing some resiliency.
Yeah, no doubt. And there's some stuff happening too with court rulings and shifts in the industry. So it's also a disrupted industry at the moment, but perhaps a name like StubHub is poised to benefit from some of those potential changes that are coming down the pike. We look at analysts, though. Morgan Stanley's Cameron Manson-Perrone, equal weight with an $8.75, said that gross merchandise sales as well as revenue growth should improve in the second half of the year. So there was some positives that are kind of seen at the end of the line here. And so you combine that with what the company said about starting the year strong and still being on track, it does set up for a potential for there to be positive surprise. They do say that the results showed progress toward delivering on reiterated guidance for earnings inflection in 2026. Citizens Andrew Boone also has sort of a similar market perform rating, talking about the better than expected results, coming in about 2% for GMS above their estimates. They say that North American resale market share leadership and international outperformance contributed to that growth. So this is a story where, expectations being a little bit beaten down, the industry being a little bit clouded, actually allowed for good numbers to be seen as a surprise.
Yeah, I mean, and seeing that nice move holding to the upside, we're just under a 20% move to the upside now. Alex, really appreciate you breaking that down for us. Alex Coffey, our co-host of Next Gen Investing here on the network. Do you want to welcome in our next guest, though? Joining us, Matthew Tuttle, CEO and CIO of Tuttle Capital Management. Matthew, great to have you back on the show. Got a nice green day on the board here. Yesterday, a bit of a mixed picture, but we did see more records. I'd love to get your thoughts on if this rally can hold and what your thoughts are on everyone pouring into the AI trade. Are we getting dangerously concentrated here, or is this just our way higher?
So, yeah, we are getting dangerously concentrated here, but I'm not seeing anything showing that this is going to slow down anytime soon. You've got kind of on the bear side, oil up around 100, interest rates higher, Fed kind of has their hands tied, possible stagflation. But the market's looking at that as something that's temporary. And they're looking at all of this AI CapEx is something that is a multi-year phenomenon. So I'm definitely not going to sit here and try to call the top on this. We think you want to be in this trade. You want to be in the bottlenecks on this trade.
All right, so we want to be in the bottleneck. So what are your thoughts about this being a bubble? Because I had a guest on the other day saying people are too interchangeably using the term bubble with what he says. It's Nigam Arora, by the way, who says it's mania. This is not a bubble in that we're detached from reality. We are attached to reality. It's just a psychology that everyone wants to be in this trade. What are your thoughts on that?
Yeah, I mean, it could be all of those things, or it could be AI is a game changer. And, in what's going on is what should be going on. So we don't worry about it. You'll know in hindsight whether it was a bubble or not. I think even though if you look at kind of the 2000 to 2002, if you were in the right names, like if you were just buying the, pets.com and things like that, yeah, you got crushed. But if you were in the right names, yeah, I mean, you had a little bit of a drawdown there, but, you were fine long term. You want to make sure you're in the right names here. Don't buy a company just because it says, hey, we're in AI all of a sudden. You really need to do your homework and make sure you're in the right companies. You're in those bottleneck trades that people are having to throw money at hand over fist. And then watch your position sizing. Don't go 100% into AI names, because if we are at the top of a bubble, that's where you get really hurt.
So if we're coming into these bottlenecks, I would bet memory's on your radar, photonics, optoelectronics, anything
center here? I mean, where are you seeing opportunity? Where specifically, when you say bottleneck, are you focused?
So all of those that you mentioned, the other sneaky bottleneck trade is space. Because what we're seeing is nobody wants a data center in their backyard. Where are they all going to eventually go? They're going to go into space. That's not going to happen tomorrow. But that's also why we think we're in the early innings of this space trade. So that's another bottleneck that I think you really want to have exposure to. You know, we launched SPCI, our space ETF, 2 months ago. I think it's up like 50%. It's just been crazy. But we do think that there's more to go in the space trade as well.
I mean, the space trade is certainly something we've been talking about, of course, with the potential SpaceX IPO and the possibility of an orbital data center. As you said, no one wants it in their backyard. People actively fighting them being in their backyards right now, in fact. So as we look at that, and you're talking about your space ETF, what do you have in there? What companies are you specifically looking at? Who are your picks here?
So I think when you look at space, you want pure play. You don't want a company where, all right, maybe 10% of their revenue comes from space. So we're, Redwire, Rocket Lab, Lunar, ASTS. We've got 11 names, and they are pure play space names. You don't want Lockheed Martin and Boeing and all of that stuff in your space ETF.
All right, and then on the memory side of this, because we want to talk about the other bottleneck, that's the big one with the shortage in demand being so high. How are you looking at that trade? Because we've already seen such an incredible run up there. Is there still space in that trade?
There's still space in that trade because it is such a bottleneck. Do you trade, do you chase the SanDisks and the Microns up here? Maybe I wait for a dip. The name we really like in here is Penguin, P-E-N-G. It's a name that is much smaller market cap. It's just starting to gain interest with retail investors. And Hynix took a big stake in them in 2024. You kind of hope that those guys know what they're doing because they're killing it.
And as you look at other opportunities here, I see in the notes that you sent over that you're also taking a lot of look at Halo companies and the Halo trade. Take us through that thesis and who specifically falls under that umbrella.
Yeah, so and it stands for heavy assets, low obsolescence. What you're looking for is companies that have assets and that would be helped by AI, not hurt by AI. So, companies like a Freeport-McMoRan, AI isn't going to put copper out of business, but it may allow, copper companies to mine more efficiently. So we really think the whole Halo idea is like the new value trade. You can't just buy a stock because it's undervalued anymore, because it could be undervalued because AI is going to put them out of business. So, and we're putting our money where our mouth is. We're launching HALX next week to really delve into this whole Halo trade.
And as we look at this setup that we have, the more macro setup with everything happening in Iran, defense is frequently coming into the conversation with this AI tie-in. How are you looking at defense as an opportunity right now?
So we're looking at defense from two angles. Number one is the convergence trade, where you're seeing kind of next level defense, the Andurils of the world, the Kratos, the AVAVs, bringing in AI, bringing in optics, bringing in cloud, and all of that converging. And, you definitely want to play that trade. The other thing we're looking at, which tinfoil hat, I get it, but, with the administration releasing all of these UFO files, we think that there's technology specifically around free energy and propulsion that the big defense contractors may have, the Lockheed Martins, the Raytheons. So we have an ETF for this too. It's UFOD. It's our UFO disclosure ETF. So we think that's an area you also want to be in.
Matthew, anytime that I can end an interview with putting on our tinfoil hats makes me smile. So thank you for bringing that to us today, and thank you for all those picks and for taking a very wide look with me this morning. Matthew Tuttle, CEO and CIO of Tuttle Capital Management. We've got a lot more for you today.
for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat, of course, will take us through the charts. Here to take us through the trades is Dan Deming, managing partner at KKM Financial. Dan, great to have you on the show. We've got a nice green board here. Cisco giving a really nice boost to us this morning. Retail sales coming in strong. It's almost like we've forgotten the inflation picture of early this week.
I guess so, Marley. And even within that retail sales numbers, the import-export data and the cost, I mean, you certainly saw an increase there that was higher than expected. And that's been the theme throughout this week when you look at CPI, PPI. But nonetheless, the market is ignoring that for the time being and focused on the continued momentum. And plus, expiration week, I think that's certainly having an impact here, driving prices higher as we continue to blow through strikes on the upside.
Thank goodness.
All right, let's talk about driving prices higher here because we've got Ford making some really nice moves to the upside this week. They're your first pick in the big three. They've got a lot of optimism tied to their new energy storage business. Does that play into how they made it into the big three today?
It does, yeah. I mean, and also just the technical pattern that is developing, I think is very interesting, as it does appear today, if we hold above this 14, where we're currently trading 14.5, would be a new high for taking out those late February highs. And I think from a technical standpoint, we look at the metrics there as far as the technical patterns, I think it also looks like a potential here for further upside and a breakout.
All right, Rick, so as we look at the technicals here, we've added 20% just in the last 5 days here on this optimism tied to their new energy pivot. But what are you seeing in the technical setup? Could we be ripe for a new high?
Well, we did make a new high earlier in terms of an intraday basis, but obviously the important thing is if we make it into a closing high that exceeds those previous peaks. So here, where we are today, 1494 is where we topped out so far. And then an old level that stuck out around 1450 or so. That's about right where we are now, matching up with those old high points that we established twice back in December and February. So an interesting setup to be sure here. Another level that stands out, 14, repeated high point here several times, and then it was a gap level before we started to transition into this downswing that brought us all the way down here in the low 11 range. So heading into this big push to the upside, we had a symmetrical triangle type shape. Oftentimes, this can be a precursor to higher volatility, this low volatility period where price is kind of bouncing around and getting increasingly compressed. Then when the price does exceed one of those boundary points, the reaction can be quite energetic here. So that's kind of the setup that many traders remain on the lookout for. Certainly not a directional bias either one way or the other. You're just looking for some kind of breakout and then for the runaway price activity to take place, as it did seem to happen in this case here. So interesting kind of example here of why we look for divergences in the RSI. We had some bullish divergence here with RSI trending upward. Price was trending downward in terms of its closes, and then it did start to stabilize more. So that can be a good example of a setup that you might look for if you were interested in that type of trading. RSI pushing into the overbought area today above that threshold of 70. So that's another more bullish development here as we digest this move that has transpired so far. Volume profile shows that we have a node right around where we opened up today. It's between about 1360 to 1390. Not too much to make sense of in terms of other heavy trading activities where we are right now because we are at those highs. So that could be a supportive area to watch out for once we start getting around that 14 mark once again.
All right, and Dan, as we look to try to capture some more of the upside here, how would you go about structuring a trade on Ford?
Yeah, I think, well, defining risk here because of the fact that it is so volatile, and I did want to ask Rick, to me it looked a little bit from a pattern, to me it was a cup and handles pattern, and that's why I think, this breakout might have further legs when you look at that pattern over the last couple of months. And so I think, capturing the upside
15.52 today, and this move that they've made since discussing their energy business has put them in positive territory year to date as well. But let's move on to your next one here. Another one with some strong performance. Year to date, we are up more than 130%. We're talking about Corning.
Yeah, again, very focused in the AI continued evolution. Certainly the partnership with NVIDIA that was announced about a week ago has been beneficial for Corning, and I think it will continue to be beneficial. Yeah, I think they're just in a great position moving forward as you continue to see CapEx spending and the build out in the AI space, and to me it looks like they're going to continue to participate to the upside.
All right. Do you see potential to continue moving to the upside here, Rick? Because I am seeing that upward sloping channel.
Yeah, and you could have definitely drawn a cup and handle on our past chart, too. That would have been an interesting observation as well. But when we do look at this one, upward channel is more of the shape that we have here. We are quite close to that upper level of the channel here. We did establish those new intraday highs as well, 211.79 yesterday. So now we are close to that area once again here. You could also draw a steeper trend line here, starting with the lows that we established after our earnings event, but this is kind of the more broad price pattern that we've established so far. So some horizontal areas of interest, 176 old highs, subsequent lows after our gap to the upside. Another notable old high here, our lighter green line near about 162.50 or so, and then another one here near 165.50 based on these gaps. So that gives us another supportive zone that you could keep in mind going forward. Finally, again, old highs, subsequent lows near 149. A pretty common pattern that you can be on the lookout for in your trading, old resistance becoming new support and vice versa. So now our moving averages show that price, that's around where we hit our low today at our 5-day EMA in dark blue, near about 200. If we were to move lower, 21-day EMA in teal, 178 is where that one comes in, still within the boundaries of this rather wide channel as well here. So now we can see too that RSI, in this case, declining somewhat here, but remaining in that overbought area above that 70 threshold here. So we can finally advance to our volume profile study, just focusing year to date due to the very rapid ascent in this name that we've seen here. We'll give a bit more of a granular look. Volume node here between about 190 to 200. Another smaller one here matching up with that brief range bound period between about 160 to 170 or so. An interesting name to be sure. A lot going on with this one. Photonics especially. AI needs fiber optic cables for all its data transferabilities. That's another space in which this company operates too.
Absolutely, and let's not forget the likely whispers that it will supply the flexible glass for the foldable iPhone. So another potential tailwind there. Maybe we'll hear about that at Worldwide Developers Conference Day in June from Apple. But as we take a look at Corning, Dan, how would you look to trade this name?
Well, I think longer term, this is going to continue to maintain the upward staircasing trend that Rick pointed out. So today's trade example is a buy right. So buying the stock and then writing a July 250 call to capture some premium. Now that's 64 days out. You can that call can be sold right around $13 here. So it gives you the initiator basically 28% upside capture over the next 64 days, which is significant. Lowers the break even down to 192 should we see some weakness. So basically buying the stock for a longer term hold, collecting some premium to lower the break even and still have upside capture zone.
All right, I'm seeing a theme here as I'm looking at the chart for your third pick. You've got momentum on the side of all of your picks in the big three today. We've got Broadcom as your next pick. Obviously, momentum on their side, of course, the last couple weeks. Take us through your thesis on Broadcom.
Yeah, again, a company that continues to benefit and will, I think, continue to benefit. Certainly, it was recently upgraded by multiple analysts as well, and we're pushing up to the all-time highs, but a little bit of a sideways price action here for the last week or so, kind of collecting some of the, maybe working off some of the overbought condition. But again, a stock I think that's going to continue to participate in the upside should we see this momentum continue. And if it doesn't, the trade example today gives a little bit of a buffer zone to the downside with the opportunity to get long the stock at a better level. So that's the idea here in today's picking the stock and looking at the trade example.
All right, Rick, so before we get to our trade, take us through the technicals that you're seeing on Broadcom, because we were pretty range bound for a while, and then we have a significant pop to the upside.
Okay, I actually have an opportunity to redeem myself here because you could kind of give a cup and handle here as well. Too bad it wasn't on Corning, which started out as a cookware company originally too. So notable high, a decline, a kind of a bottoming out, a resurgence back to the initial resistance area, a decline once more, and then a rally, giving you that cup and handle type shape. So this is kind of the point we were trying to make earlier with our first chart that we can now illustrate a little bit better here. So an upward sloping channel type shape once more. It can often be useful to start trend lines after some kind of gap to the upside and then follow along with that trend area here. So in this case, put it along the lows, duplicate it, and put it along the highs. It gives you this general boundary to watch out for. These old highs here, 415, came back into focus here as a repeated low point here. We did have intraday lows beyond that point, but mostly our closing prices remained around that level in the past couple weeks here or so. Another gap level to consider here, 394 to 382. That was around where we hit some lows. That's around where another gap started once again. So these gaps can often be worth keeping track of on your charts as you go forward. They can come back into focus even quite a bit down the road. So now we are crossing above our blue 5-day EMA once more, that mark here, 426.87. At this point here, our teal 21-day, our slightly longer term EMA, comes in around 410. So that would be relatively close to our trend line if we did start to break through both of them. That would be perhaps a confluence point to consider. RSI was trending downward here, but it looks like we are breaking through this trend line here. So keep an eye out if the stock can hold on to these highs and start to make new relative highs on the RSI, or even push back into the overbought area as we mentioned with our previous chart. So now our volume profile shows only a small pocket of activity here that aligns with those old highs, 393 to 407 roughly. Another smaller node down here, near about 370 to 380. Those are the areas that stand out from this perspective.
All right, and as we dive into the trade here, Dan, what areas are you focused on? What levels come into play?
Yeah, I just wanted to say, Rick, my coffee, I think, was kicking in while I was staring at these charts this morning, so that's why I kind of, got the cup and handle theme in my head. Yeah, I think there's a couple of areas here that are significant, and current price action. So the trade example today is buying a call spread in June, relatively short dated, but selling an out of the money put. Should we see some weakness over the next month, they have the option to get put in the stock at a better level. So again, the trade example is buying the 430, 480 call spread. So basically, intrinsically, when you sell the 380 put, it puts you in the stock pretty much where the stock is currently valued. So you're getting access to the stock at basically where it's currently trading, maybe a couple dollars higher, but nonetheless very close to the intrinsic value here. And so that allows the initiator to capture further upside from this current price level. And if we do see some weakness, then you get put in the stock at below 190, right around that 200 level, which to me looks like some support level here if we did see some weakness over the next month.
All right, right now Broadcom trading more than 5% higher on the day. We're at 438.76. They've got their earnings coming up on June 3rd. Dan, really appreciate you being with us today for the Big Three. That's Dan Deming from KKM Financial. And of course, Rick Ducat, our lead market technician, for always breaking down the technicals for us. Coming up next, we are going to spotlight the buy now, pay later industry after we got earnings from Klarna. That's next on Trading 360. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
My man!
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every Download the Schwab Network app and stream anytime wherever you are.
From sit-ins to marches, these are the stories behind the headlines told with context, clarity, and
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the buy now, pay later industry after we got earnings from Klarna. Joining us now, Bryce Deeney, co-founder and CEO of Equipify. Bryce, great to have you on the show. Now, we heard from Klarna. We're seeing this great pop to the upside on their results. They're up more than 15% today. What did the earnings tell you about the state of buy now, pay later?
Yeah, thank you so much. It was a great quarter, no question for Klarna. But I think the headline is going to be 44% revenue growth. Reality is you need to go one click deeper. If you look at layer down, fair financing for them was up 138%. The Klarna cards crossed 5 million users. This is no longer a buy now, pay later. They're essentially a bank operating as a buy now, pay later company at this point.
So as we see this sort of pivot point that you're highlighting here, has this officially become a mainstream payment behavior as we're seeing such an uptick in that? And I think the most recent metric is buy now, pay later offerings are 82 million Americans want to use them. Is this now a mainstream behavior as opposed to what I think we were calling a fintech trend for a long time?
Absolutely. Our data at Equipify definitely shows that buy now, pay later is the new consumer credit that most, particularly younger consumers, Gen Z and millennials, are preferring over traditional credit cards. It's not just Klarna. Our data proves that this is true amongst many, many fintechs and even major banks, and really should be a wake-up call to traditional credit unions and community banks.
Yeah, and I know you have Affirm also in there alongside Klarna. They also have the debit card offering. There are some savings products. Of course, the bigger banks offering broader banking services. As we look at the space and the growth and the opportunity going forward, is the battle really not about installment loans anymore and more now about owning that full customer relationship?
Absolutely. Next to debit and credit, flexible payments or buy now, pay later is really just the third pillar of the wallet that consumers are preferring as a payment method. And really the battle is to ensure that you own the purchase to payment journey. And that's really what we focus on.
And so as we see banks trying to defend their dominance in this space from companies like Klarna and Affirm, but also make sure that they're staying with the trends here, what advantages do banks still have in the fight here? Is deposit, scale, is it trust?
All of the above. You know, banks already have a relationship. They already have a card in the wallet. They're already on the app. They already have the, the back and the faith and the trust of the insurance, be it, FDIC or other, and they already have the data. So the fact that they're able to come out and offer these, products and services, pay over time solutions to their existing customer base is truly an advantage.
And do you think we're going to see the next trend here then become some of these fintech firms trying to become banks themselves, seeking bank charters? I know Circle seeking a bank charter. I mean, we're seeing some of these companies try to make these moves. Is that the next step here?
Yeah, I think it's the natural evolution of, if you use checkout as kind of your wedge to get into the wallet, wrapping that around traditional financial services is clearly the play. I also think Affirm recently filed with the OCC for their banking charter as well. So we're seeing that move across the board for all of these major fintechs post-IPO.
And in what you're seeing, does the consumer actually care about who's powering the installment loan, or is this just an ease of use race?
I do think initially it was mostly who was available at that particular, website or commerce experience. I think most people remember, pre-pandemic years when you could do this at like a specific retailer, where now there definitely is brand affinity building to where, people like my mom would prefer to use this from her traditional bank, or maybe a younger consumer would prefer to use this attached to the fintech type of experience that they're used to. So I do think we're starting to see some affinity and deep roots built between the brand and the particular user.
And you mentioned your mom there. Obviously, we see this, in different generations, younger generations very into buy now, pay later, older generations adopted the concept but still want it tied to something familiar. As we look at traditional banking apps putting the buy now, pay later, or the installment option potentially into their apps, does that then erase the need for the standalone fintech model? I mean, will that be such a disruptor in a way that it kills it off because they have access to their checking, their savings, your direct deposit data? Is this a moat that just can't be recreated?
I do think that the relationship and the trust that a traditional financial institution has built, not only with their user base, but also their community, sometimes for over 100 years, is nearly irreplaceable. Our data at Equipify does show of the 100 plus financial institutions that we power, consumers definitely prefer it as an embedded solution that has less friction, less fragmentation within the wallet than using standalone third-party fintech apps and services. I think there's always a place for competition, and fintechs typically lead the bleeding edge of building that first net new thing, but then traditional financial institutions usually respond in kind, and you're absolutely right. They definitely have a strategic and structural advantage.
And let's look way down the road here, Bryce, because we're running tight on time here. 10 years from now, are we even going to say buy now, pay later, or is every transaction going to have a flexible duration toggle? Will this just be an option? Like, are we watching the slow motion merger of credit card and the installment loan into one single fluid product?
I think buy now, pay later is no different than any other trend among technology right now. If you think about long form media going to shorts like this, where it's shorter segmentations, buy now, pay later is the same exact thing as a form of credit. It's real time, it's frictionless, it's small, and it's bite sized. But most of all, it puts the consumer in control of their own wallet. I do think buy now, pay later is a 4-letter phrase that a lot of us use today, but you're right, 10 years from now, it's just going to be called credit.
Bryce, it's been great to talk to you. I do wish we had a longer form setting to keep talking about this, because certainly a lot to explore in this space as it's rapidly growing, but really appreciate you bringing the insight to the program today. Bryce Feeney, co-founder and CEO at Equipify. Coming up next, we've got disruptors. We're going to take a look at NVIDIA after Reuters reported that the chip giant was cleared to sell its H200 chips to select customers in China. Trading 360 will be right back.
Well, you know how fast I'm moving here. Apple trying to break down again, but market breaking down, Apple breaking down.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
How's it going? First day, so sometimes, Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Aw, she's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent. Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up for college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything we need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab. Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning, Nicole. We're about 2 hours into our
so far? Nice day of green here on the board.
For my babies.
We'll take another day of records, right? As you've been saying and seeing, the S&P 500 and the NASDAQ at records. NVIDIA has been an incredible performer. We've had a slew of price target upgrades just playing catch up. And even retail sales coming in with a better than expected number. Of course, a lot of that was attributed to higher gasoline prices and inflation. But the big picture here is that you are seeing some optimism on Wall Street. We even saw the Dow Jones Industrial Average cross the 50,000 mark. And for people at 401ks and IRAs, they feel so great with that. The Cerebras IPO has had incredible demand. It really shows. And it's the biggest since several others like Uber and Rivian. And, it really is on the charts this year as the biggest in a long time. And seeing the demand, it really tells the story. As far as other movers that we've been talking about, NVIDIA I mentioned, which is really having a great time as far as the stock goes and crosses $5.6 trillion market cap, the largest company, but also now working with China, the H200 chips now being allowed to go to 10 Chinese companies. That's a big deal. That could be over $50 billion. That's in numbers for Jensen Huang. Cisco has been a great performer, and Intel's pulling back as AMD is taking some market share, and so is ARM. But overall, I think people are feeling pretty good about the big picture, at least for the moment.
Yeah, the AI trade powering everything, it seems, right now. But as we look at another name moving higher that's not necessarily caught up in the AI trade, Starbucks seeing a nice boost today. Will you take us through the latest with Starbucks?
Yeah, and I think about how Brian Niccol came on from Chipotle. Brian Niccol was really viewed as someone who was incredible in really leading Chipotle and turning Chipotle into the mega name that it is, and hopes for Starbucks. And we've been seeing a lot of that. In fact, the stock is at new 52-week highs. You did have analysts over there upgrading it over at TD Cowen, upgrading it to a buy from a hold rating, and putting a new price target of 120 up from 106. Now, the 120 price target is much higher than where we are right now at 107. And so that shows you, and the stock is already up about 27%, more than that, for this year alone in 2026. They said the company has been prioritizing labor investments, and that also really helps to have them recover for margins. They thought that there was a lot of upside potential for sales and earnings, and that will justify the above consensus numbers for fiscal 2026 that we had been seeing. They said that the sales revisions were looking positive, and that the strong categories backdrop that it had overall were also positive. So they said there's numerable, tangible issues, and so in a good way, and that really helped them to lead and move to this buy rating, and so that's why you're seeing that. But this was a $77 stock last November, and right now it hit 108. Marley?
Yes, and that nice price target increase up to 122, so still trading below. More optimism here from TD Cowen. Nicole, really appreciate you taking us through that note here. That's Nicole Petalides. Now it's time for our disruptors. George Tillis, senior markets correspondent, here with today's company. We're talking about NVIDIA. Reuters reporting the company was cleared to sell its H200 chips to select Chinese customers here, seeing a really nice pop in NVIDIA, up 4.5% here. So, George, take us through the latest. What's Reuters saying here?
Well, I think this is important, and I think this is part of the catalyst that NVIDIA has, at least as of recent. It's taking the reins in terms of the larger scale semiconductor movement we're seeing right now breaking out. And this is big news, because if you look at NVIDIA's earnings calls in the past, they've actually provided earnings without including sales to China, and so that is creating a constraint on potential revenue guidance that the company's provided. And so if you look at the estimated revenues that they missed out on last year based on some of the constraints in exports, between $7 and $8 billion. So this news that the U.S. is basically approving 10 Chinese companies to purchase the H200 ecosystem of chips, and this includes big names like Alibaba and Tencent, as well as JD.com, just to name a few. This again speaks to the abilities for NVIDIA to continue to expand its architecture globally. So the administration has really been a constraint on NVIDIA's sales in China. I think this is a very positive catalyst, and I suggest that this is why the stock is also breaking out of a trading range that the stock has been in since
where the
late last summer.
rejection is
Yeah, I
gonna
mean, at
come
one point,
at,
China
I
accounted for
don't
13%
know.
of
That
NVIDIA's
has been
company
going
revenue.
high.
So, I mean, it's certainly a
Look,
loss here as we've seen them not factor any sales into the several
this is the top
reports that we've
of
gotten
this.
from them. But we do have a report coming from them next
Top of the
Wednesday. So,
market. Just
as
been
you're looking
going
at it now, moving out of that range, it's moving to the upside.
since
We know we have
forever.
the
Just
earnings event coming. We have continued discussions happening between
invest,
Trump
bro,
and
I'm
Xi and
telling you.
China. So, a lot of potential catalysts here in either direction. How would you go about structuring an example trade?
Yeah, there is a lot of catalysts. I mean, just in context, if you look at the estimated
Apple is like
EPS
the
growth,
slowest
they're
one
expecting
out of
over
all of
120% in sales at
Meta, I put my money
118%.
in.
So these are still remarkable numbers, and any
Meta
additive
and
sales
Nvidia was
from China are going to be accretive.
today, and Oracle was
The
going
trading
today.
range is important because it's been so long since it broke out that the range was about $40, somewhere between 170 and 210. It recently broke out of that 210
It's all
high
good.
trading range. So that $40
get
in
some
the
of this
context
spot
of the
bread.
next measured move places the stock right around the 250 area. So that's basically double that trading range move. So I'm basically going to look at structuring a trade that goes out to June, expiration, third week, and taking into consideration the higher end of that trading range by buying a call vertical. So I'm going to buy the 235 call and then sell the 255 call against it. So it's a $20 wide spread. And altogether, you could purchase this for about $7 a share or $700 a contract. So the whole premise is bullish. Break even by the third week of June is 242.
Oh,
and then your
man.
max profit
For
is
morning,
essentially $13
this is like
of
a $4,
profit
$5
relative to $7
move.
of risk.
I
So the
don't
stock
know
has
how
to
much
hit at
money
least
they
the
can do. I don't know
255
they're going to
for
give
that
us
max
another
profit to
$5 move
occur.
on the upside.
But you have a lot of time in this trade,
We're going to see.
about 4 weeks.
Right now they have
Yeah, and only about $20 off of that
lunch
max
break
profit
right now.
level, only $7 below your break even right now with this nice 4% pop we're seeing today. George, really appreciate you being with us to give us the latest on NVIDIA and also for that example trade. I'll see you a little bit later today. Coming up next, it's time for our 360 round. We're going to bring in our panel to take a look at the earnings from Cisco. Shares rallying to a record high amid its increasing role in the AI build-out. That's next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Look at MSCR though. Goodness.
I'm Alex Coffey. And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started
You
with
guys are
nothing.
great.
He worked hard, and after he passed away, the torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The
Marcus
two
teetering
grandchildren
up there.
planning for their college educations. Someday it'll be their turn.
What that mean right there? Are we gonna get some type of pullback?
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what
Market
active
don't wanna
traders
pull
need to
back.
stay
Look
ahead.
at this.
Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Market don't wanna
Welcome
pull
back to
back.
Trading 360. I'm Marley Caden. Cisco is rallying to a new all-time high today after beating earnings expectations on the back of strong order growth. The networking company announced significant job cuts as a part of a restructuring plan as well to boost AI infrastructure initiatives. Now it's time for our 360 round, of course, to take a closer look
Man, look at
Cisco.
PL. I see you,
Joining
PL.
us on our panel today,
What is
Melissa
going
Otto,
on?
head of Visible Alpha Research at S&P Global Market Intelligence, and Alexis Robert,
come
the
back,
COO and
touch this
portfolio
target.
manager of Alexis Investment
Market
Partners.
breakout
Great
PL's
to have
going
you
with
both
it.
with us. Melissa, I'm looking at this pop here we've got from Cisco. We're up 15% here. If it can hold, it's its biggest rally that we've seen since 2002. Is this just a reaction to a strong quarter, or are investors really seeing this as a turning
I would
point
like
in
to
how
see a
they're
pullback
viewing
on the
Cisco
stock.
in the AI trade?
For long.
All right, thanks for having me here today. It's great to be talking about Cisco. It feels like we're in 1999 all over
No
again.
cool down yet. This is
It's
just flying.
their earnings report was certainly exciting. What we've seen in the Visible Alpha consensus data is that upward revisions straight away hitting our data set, just demonstrating that overall market expectations for Cisco are moving higher.
And Alexis, I know that you've been positive on the company long term. You hold it as a position, but you did trim that position. So take us through what you're seeing here in the earnings and why the trimming, but still the hold.
Let's see what Scanner says.
Yeah, well, hi, Marley. Thanks so much for having me on. We're very positive on the company as a whole. As Melissa said, it was a very encouraging quarter, very encouraging call. That being said, we bought the stock in April of 2025, so just about a year ago. And in that time, the stock has nearly doubled, and about 40% of that is due to multiple expansion. So while we are definitely positive on the company and appreciate holding the stock, in order to add more to it, we really want to see the stock digest some of these gains that we've gotten to experience already, whether that be through a sideways movement or through a pullback, either way. But it's just because the valuations have gotten a bit rich. However, we are very happy holding the stock and positive on the company.
And Melissa, we were covering these earnings live on air yesterday, and when the order number came across, it was very strong, 5.3 billion year to date. Then the projection number came across at $9 billion, up from 5. As far as your reaction to that and what it's telling you about demand, what were your takeaways when you saw that come across the wire?
Boom, better than expectations, really crushing consensus, really, I think, outpacing where much of the market was, even on the high end, really coming, kind of coming in well ahead of those expectations. So I think overall, quite a positive surprise. One of the things that is very interesting takeaway is that we're also seeing upward revisions, not only for this year, but also for next year. And I think that's a reaction to those order numbers.
And Alexis, do you think here, as we're looking at this reaction, the market is finally appreciating that AI isn't just about chips, that the networking layer that connects all the compute power is so important and is seeing far greater demand, especially when it comes to Cisco, than even the street was anticipating?
Yeah, I think that that's been a play at it for a while now. As I said, this has been going on for about a year, but this, as she said, boom, is definitely reflective of that acknowledgement and just the excitement overall. I mean, Cisco is an exciting company within an even more exciting story with the AI trade. But what I think is really going to be interesting and special coming out of this, Melissa referenced 1999, is when there's that transition from AI build-out to the actual productivity miracle as a result of the AI build-out. And so it'll be interesting to see, are we in 1998, are we in 1999, how close are we to that 2000 mark where we see more of a broadening of leadership, almost a rotation, where other companies that are benefiting from this technology that Cisco and other companies are building out right now.
And Melissa, last question to you here. We saw Cisco announce these new routers and switches during the quarter. How important is product innovation going to be in defending market share against some of these more AI native competitors?
Absolutely, it's critical. I think, continuing to sharpen the saw and provide enhancements to their existing hardware and their product base is going to be critical. It's going to continue to differentiate them and enable their products and services to rise above.
Really appreciate you both being with us to take us
breakfast
50-day moving
chat.
average. We're starting to see more and more dispersion amongst the volatility on the single stocks versus the index. Index falls very low as we see. Single stock volatility continues to go up, and a lot of that, Diane, is not from hedging. It's from upside call buying. It's from chasing a lot of these winners, especially in the technology sector. We're seeing it specifically in semiconductors. We're seeing it in the memory space. Even with old tech today, I know we'll talk about Cisco in a couple minutes, but that was something that just continues to resonate with the market. They want to continue to participate in the upside, and I think that at some point it could get a little bit frothy, but here's the thing: earnings have supported it. Been talking about this all week. 25% year-over-year earnings growth in Q1. I mean that doubled expectations, and now you're seeing something you don't always see. You're seeing analysts up the projections for the rest of the year. A lot of times this is the season where they start to kind of pull back on some of those projections, but there's
700